about 4.5 minutes. What is it till the opening bell here on this Wednesday morning? And here's a mover that we are tracking. That is BlackBerry. The shares are off by 3% this morning. They had been rising after the close yesterday, after the company came out with its numbers. And then it looks like people took another look and they said, maybe we didn't like those numbers so much. For the third quarter, the company did beat estimates, revenue coming in ahead of estimates, and the company posting adjusted loss per share that was better than estimated, or adjusted earnings per share, I guess, of break even here. But it looks like that the company's guidance is disappointing, according to some analysts. So looks like it missed RBC estimates as one example. Saz, as we know, BlackBerry doesn't do what it used to do in terms of making BlackBerries, but now known as a software and security company. And it's also a company that sort of got memed earlier in the year, along with so many others. What do you make of these numbers and the action that we're seeing in the company?
Yeah, it was a bit of a snoozer to me, Julie. Go through the numbers here. The conference call didn't really get me fired up, certainly. And let's keep in mind the stock was about almost $29 at the height of the meme stock mania in late January. But you look at the margins in their Internet of Things division, those were flat. Cybersecurity division, those margins also flat. Licensing business down about 600 basis points year over year. That wasn't good. Company said on the conference call they have not yet finalized their deal to sell off a large part of their patents. Market doesn't like that as well. All in all, stock, it's right to see the stock declining the way that it is. But it does, I will say this, Julie, remind me of how much I used to be a big BBMer on my BlackBerry way back in the day. It was a very exciting time. Very exciting.
I think all are exciting times for you, Brian Sozzi, in the Saz world. Yes, I was also a BlackBerry user and BBMer back in the day as well. So we'll keep watching BlackBerry there. Again, the shares are now down nearly 4% in pre-market trading. Let's also focus on CarMax, which reported its numbers this morning as well. It looks like that company came out with earnings per share that beat estimates, $1.63 versus the $1.44 that analysts were predicting. And those shares are trading higher. Revenue rising 64% year over year to $8.5 billion. Used vehicle sales, they're up 53%. Wholesale vehicle sales coming in ahead of estimates as well. So it looks like on a number of different fronts, the company beating estimates here. Comparable store used vehicle revenues up 51%. So, you know, the car business continues to do well for companies like this.
Yeah, CarMax doesn't really do it for me either today, Julie. I think the play all this year has been AutoNation. We have talked to now outgoing CEO Mike Jackson numerous times. The AutoNation shares have outperformed CarMax really since March of this year, as they should. I mean, that company has been more aggressive on stock buybacks, more aggressive opening up new locations, more aggressive, I would say, in taking market share. You had CarMax on their earnings report today say they only opened up one dealership in the quarter. Will open up 10 for this year during a major boom in sales of new and used cars. To me, that's not getting the job done. Also, margins didn't really excite me either here.
All right. Well, so much for that. I mean, I guess
I sound bullish. AutoNation and Carvana. Those are the real plays here. CarMax just chilling out there in third place.
Do you miss being an analyst, Saz? In moments like this, I feel like you want to give like some buy and sell recommendations, but you can't quite do that.
I can't do it. I continue to stop myself, though. I've gotten myself out of that habit about a year ago, so I'm good.
Yeah, that's probably,
I've cleansed my
best.
soul. I don't want to be an analyst anymore. I've cleansed my soul. Though that era's done.
I am curious as we start to see pricing come down, and I don't know when that's going to happen more consistently for both used and new cars. It'll sort of be like just like the rising tide lifts a lot of boats. When the tide ebbs, we'll see which boat is still ship-shape, so to speak. So, I think it'll become more clear with this proliferation of online and in-person car dealers, which one of them is in the strongest position as we start to see pricing wane in the coming year. That's what it feels like.
What I do find interesting, too, on another note, how these car dealerships are planning for an electric car future. It's one thing to start offering these on the platform, Julie, but I still don't think the service stations are in any way set up to support these electric vehicle ambitions by the big three automakers. I just drive by the service stations by me. I mean, I don't see any signs suggesting they can service electric vehicles. I'm not sure if they have the infrastructure to service electric vehicles yet. So I would expect CapEx is going up for all these guys in the coming years.
Interesting. So we'll see what they have to say about all of that as well.